Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. And in our top business story, Dubai developer Emaar is to list its shopping malls and retail subsidiary on both the London and Dubai stock markets. That's according to reports in a local daily. The company's chairman, Mohammed Al-Abbar, was quoted as saying that it will be a dual listing, adding that as a Dubai company, the listing should be in Dubai, but will also list in London. According to the report, the local listing will take place on the Nasdaq Dubai Stock Exchange, with the company aiming for the dual listing to take place before Ramadan. Emaar said on Saturday that it will list up to 25% of the Emaar Malls Group equity through a secondary offering of shares. It added that the listing of other Emaar subsidiaries will also be considered as and when appropriate. The company's Egyptian operation and hospitality group are also both being primed for a stock market float, with Al-Abbar adding that he wouldn't rule out further IPOs. The funds raised through the mall's listing, estimated at between 8 to 9 billion dirhams, will be primarily distributed as dividend to the company's shareholders, the company said in a statement. Emaar Malls and Retail is one of the high-growth business entities of Emaar, having recorded full-year 2013 revenue of 2.837 billion dirhams, an increase of over 20% compared to 2012. Dubai's Jumeirah Group on Monday said it has signed a management agreement with GT Land Holdings to operate 169 luxury serviced residences, in addition to the 207-room luxury Jumeirah Guangzhou Hotel, which is nearing completion in China. The agreement was signed at a ceremony held at the Burj Al Arab, attended by Su Meng, chairman of GT Land, and Gerald Lawless, president and group CEO of Jumeirah Group. The previously announced 207-room five-star luxury Jumeirah Guangzhou Hotel is scheduled to open in 2015 and will feature 10 food and beverage outlets, a sky lobby on the 49th floor, and banquet and conference center. The 169 serviced residences will be located in a separate low-rise west tower. According to Gerald Lawless, the company is looking forward to bringing the Stay Different promise to Guangzhou and establishing Jumeirah in a second key destination in China, one of the world's fastest-growing markets. Jumeirah Group currently operates 22 luxury hotels, resorts and residences, including 11 in the Gulf region, 6 in Europe and 5 in Asia, with a further 15 hotels now under development. Most of the wealthy individuals in GCC are focused on wealth generation and remain optimistic about the local economy. That's according to the new findings by Emirates Investment Bank. At a press conference, the CEO of the Emirates Investment Bank released the key findings on the GCC Wealth Insights report, which was based on a survey of 80 high net worth individuals from Saudi Arabia, Oman, Qatar, Bahrain, Kuwait and the UAE. The survey was conducted by the market research firm Ipsos, which held one-to-one interviews during the third quarter of 2013 with the 80 individuals that had $2 million or more in investable assets. The survey revealed that 90% of the respondents are focused on growing their wealth, while 87% of them remained optimistic of the Gulf economy's outlook over the next 5 years. While 75% were positive on the prospects of the global economy, particularly with regard to re-emergence from the recession, the survey illustrated a growing confidence in the local economy, as 64% claimed that they are more likely to invest closer to home. Based on the findings of those preferring to invest closer to home, 47% of them viewed the local economy as stable and secure. According to the CEO, their inaugural survey was aimed at understanding the factors which influence the wealth and financial decision-making of the individuals with regards to banking and investments.
We can comfortably say that the experience of the respondents over the last few years influenced their opinion. The situation in the global economy, the performance of the global economy, the performance of global banks over the last few years must have had an impact on high net worth individuals from the region and their appetite, where they would invest and what sort of institutions they would use. So the trustworthiness of the regional institutions, the confidence in the regional economy, these seem to prevail over the concerns that may have existed on the global scene. The survey did not say that people shunned global investments. It merely said there's a preference to the regional investments and the regional institutions